Now, Barclays is expected to sell more of its stake in its African subsidiary in the coming weeks to take its holding in the business to less than 50% and strengthen the UK parent bank's capital. The lock-up period following a previous share sale expires today, Tuesday, and Barclays is expected to sell more stock in Barclays Africa as part of its plan to deconsolidate the business. Barclays CEO Jed Starley, who took over a year ago, decided in March to sell down the stake in its African operations because the bank's 62% ownership meant it had to fully allocate capital to the business, but got less than two-thirds of its profits. The bank sold a 12.2% stake on May 4, leaving it with 50.01%. It needs to reduce the holding below about 20% for it to be deconsolidated from its accounts. And Nigeria's FX policies have continued to drive the domestic commodities market as prices of imported materials have gone up by almost 50%. Now, let's see the development of the domestic commodities market so far. I'm being joined by the head of research at financial derivatives company, Damilola Akimbami. Good afternoon, Damilola.
Good afternoon, Chimeze.
Now we have seen the price of rice, flour and imported materials go up. However, the price of tomatoes has come down drastically. What is driving that price of tomato, dropping it sharply down?
Oh, well, what's in it is that the price control initiative has been successful so far. So that's why we've seen a significant drop in the price of tomatoes. You know, the tuta absoluta event that occurred around early May. So because of that, government had to embark on an initiative to address that issue. And also we noticed that the pest, the tuta absoluta pest, doesn't thrive that much in the rainy season. And thankfully we're in the rainy season, so that has also helped to address the impact of the pest on tomatoes. So we've seen a significant drop for the large basket from about 25,000 naira that it was before to about 4,000 naira per basket and about 800 naira per basket for the smaller size. So that's actually what is happening. The initiative has been successful so far. And other prices, well, we're seeing a different trend occur in other prices. So for instance, flour and rice, the prices of these items are actually increasing despite the fact that we're in the harvest season, and it's because of the exchange rate impact on these commodities because they're imported. And if you've noticed, in the last 1-2 weeks, there's been a lot of currency volatility with the interbank rate trading to as much as 330 against the dollar and the parallel market to about 371. But thankfully, as at yesterday, the interbank rate actually appreciated to about 360 naira against the dollar, while the parallel market rate has depreciated further to 381. So because of this currency volatility and the depreciation of the naira, that's what is feeding into imported raw materials, and that's what we're seeing the prices go up. But aside from tomatoes, flour and rice that are showing changes in price trends, other commodities have been stubbornly high.
All right. Talking about some of those imported materials. Now, yesterday we saw the PMI for July released, and that showed that manufacturing activities actually improved owing to the new FX policy. So how do you put this together, having an increase in prices of imported raw materials and, of course, manufacturing activities improving?
Well, the Purchasing Managers Index, the PMI, it's a leading indicator, and it actually signals the health of the manufacturing sector. So being a leading indicator, it just shows, it gives you an idea of what it's expected to happen in the manufacturing sector and even GDP as a whole. So the recovery that we witnessed for both FBNs and PM and the CBN just shows that in the manufacturing sector, manufacturers, producers are becoming more optimistic about the outlook of the manufacturing sector. And also with the forex policy that is in place right now, there's still a lot of dollar liquidity concerns, but there's optimism that down the line things are going to improve. And so it also just informs or lets us know that in Q3 what we're going to see, we're not going to see obviously a sharp recovery in growth, but Q3 growth numbers will not be as depressing as Q1 and Q2. So it shows some level of confidence is being restored gradually in the sector and in the policies that have been implemented. But let's just bear in mind that there's a time lag between when policies are implemented and the impact is felt on the market. So the foreign exchange policy that has been implemented and even the interest rate policy that has been implemented, these policies, we're going to see the impact in there's a time lag, so we're not going to see the impact immediately, maybe in the next 2 to 3 months before we see everything come to play. But there is renewed confidence gradually being restored in the economy and in the markets.
All right. Now, you did mention that yesterday the Naira appreciated at the interbank market, and of course at the parallel market we're seeing the Naira depreciating further. So yesterday, 380. Now, does that mean that, of course, basically it seemed to be obvious that domestic commodities are priced based on what is done at the parallel market?
Oh, well, actually, domestic commodities are priced. It depends on where the manufacturer can source its dollars from. Initially, before June, because of the intense or severe dollar scarcity, most manufacturers had to resort to the parallel market to get to source for dollars. But since June 20, with everything that's been done, there's been improved accessibility to the dollars. So we're seeing now more manufacturers being able to access dollars at the interbank market. And the appreciation that we saw yesterday was actually because of, even from what the CBN released, the total dollar that was sold last week on an average basis, it was about $40 million sold on a daily basis on average last week. So we're beginning to see dollar liquidity pick up, and that was what triggered the appreciation yesterday. So for domestic commodity prices, now what does it mean? For those that actually can't source their dollars from the interbank market, it's going to be a source of relief. It's compared to when it was 330. But for those that have to source for their dollars from the parallel market, it's going to impact significantly on the prices. So, for instance, the 41 items that have been restricted from interbank forex, with the manufacturers of such products would have to resort to the parallel market at 380, and that means that, well, depending on the elasticity of the product and depending on whether the good is a necessity or luxury, it will determine how much the producer can pass the increased cost to the consumer. And let's also bear in mind that consumer resistance has kicked in. So definitely producers of such commodities that have a high input content. And yes, please.
Yeah, we have to go now. Thank you for your time. Yeah, you're trying to talk to us about what's been happening at the foreign exchange market and why we're seeing the different prices and commodities.